Welcome to our first lecture in managerial accounting. Before we actually get to managerial accounting, we're going to do a little review of financial accounting. For most of you, this is probably last academic year that you took financial accounting. And I know over the summer, through the months, it can get a little hazy and a little far back in the memory banks. One of the fundamental concepts of accounting is debits and credits. When you learned it, you probably started out learning it in T accounts, with the name of the account being at the top, the left side of the T being called the debit side, because that's what the word debit means. It's a derivative of a word that means left. The right-hand side is the credit side. So when an entry is made on the left side of a T account, we say we are debiting that account. When we're going to record an entry on the credit side, we say we are or on the right side, we say we are crediting the account. There are two types of accounts. One's that the debit or the left side is where you record any increases to the account, and the credit is where you record the decreases. So anytime you want to show that this account is getting more, the balance is going up, you would make an entry on the left side or the debit side. When you want to decrease the account, you would credit it or make an entry on the right side. Those kind of accounts are called debit balance accounts because the debit should be their larger side. It's where the increases are. And then there are accounts that work just the opposite, where the credit side is where you record their increases and the debit is where you record their decreases. Want to kind of review, hopefully you remember which ones these are. Assets, withdrawals, and expenses all work this way. You record their increases on the debit side, their decreases on the credit side. To help remember it, we took the first three letters of each of the types of accounts, assets, withdrawals, and expenses, and made awe, like I'm in awe of something or it's awesome. The other kinds of accounts, the ones that increase on the credit side and decreased on the debit side, are the capital, liabilities, and the revenue accounts. Again, taking the first letter of each one, they're clear, CLR. We call those credit balance accounts. A more detailed list of those rules is here. Assets increase on the debit side and credits decrease on the credit side. Every time you write a transaction, you must have equal debits and credits. So if I do a $30 credit, I've got to do a $30 debit somewhere. Liabilities, capital, revenue, withdrawals, revenue, and expenses, just as we talked about here, they're written out in the 7 rules. One of the things you have to do this week is fill out a spreadsheet that I have uploaded for you in Moodle. It has 20 account names. You can see them listed here. I've given you an example of cash and said, what kind of account is it? Because you can't apply those rules if you don't know what category it fits into. Remember, our T account said that all assets work this particular way, but if you don't know cash is an asset, then it's pretty hard to apply the rule. So it's going to be real important that as we learn any account name, you can classify it. So I want you to go through and put in here the category. Accounts payable is what? It's an asset, a contra asset, a liability, etc. Then what kind of balance does it have? Debit balance or credit balance? That's really the only choices. What financial statement would you find this account on? Does the account get closed at year end? If you remember in financial accounting, the first few chapters walked you through the accounting cycle. The last step in the accounting cycle was to close the books, but not every account got closed. So go back and see if you can remember what kinds of accounts get closed and which ones don't. If you find yourself struggling, contact me. I'll walk you back through it. But it's going to be important to have a good grasp of some of these fundamentals of accounting, because while we're going into a different area of accounting, it's still accounting. So we're kind of trying to do some exercises to bring this back up into the memory banks. So step one of your homework is finish this chart and submit it. The other thing you have to do in your homework is this journal entry assignment, which is taking its own sweet time loading. Okay. Second part of your assignment is to prepare journal entries for the following transactions. Each one has a date assigned to it, and you're going to use the blank general journal that's loaded into Moodle and fill it out for the transactions listed here. There are 12 transactions. This will give you a chance to practice concepts that probably took you through a little ways into merchandising. You went through the whole accounting cycle in financial accounting. You also delved into the concept of a company that sells products. So it's going to hit some of those topics from those chapters without going seriously in depth, because some of the concepts won't stay with us in managerial accounting. So 2 assignments besides the discussion forums. Complete the chart, fill out the journal entries. See if you can remember, and then please let me know any areas that you feel like, I just don't remember this stuff. Is this going to be important in this class? Can you help me bring it back into my memory banks? And we'll figure out some ways to refresh you on those concepts.